All right, everybody, welcome back to the channel. So I have a special guest today. I have Tony from over at Rock Financial. Just to swing by, you all have heard me several times mention Rock Financial, whether it's on the community page, and I've also done a video. But I wanted to bring Tony in so that we can discuss some of the details, whether it's for new businesses, old businesses, for anyone that's looking to get funding for their business, specifically business funding, and just to get some things clarified, get some questions answered. And I just want to introduce everybody to Tony. Tony, I appreciate your time for this.
Yeah, thank you so much, Ronnie, for having me on, man. Super duper excited. As you mentioned, you've gotten a chance to film some content, but always appreciate you giving us a chance to kind of spread the word as just like you are. We believe we're commercial financing's best kept secret, so I'm excited to share some of those secrets today with you and your audience.
Thank you. So let's jump right into it. So, from my understanding, you all work with new businesses. How new is new?
Correct. So, this term startup, right? Like everybody talks about startup business. If you were to go on, onto to Shark Tank, right? And you tell them you got a startup business, you could be 10 years into making revenue in that business, but just not fully have reached your potential just yet, right? When you talk about like traditional financing or you talk about a bank, I'm not talking about Shark Tank, but I'm talking about like the banks, right? Chase, Wells Fargo, Bank of America, those types of banks that are looking at businesses and saying, hey, we might extend them some capital. The way that they look at startups is basically anybody that's under 2 to 3 years in business. Because what banks actually want to see is like 2 to 3 profitable tax returns. So that's what banks are looking for, right? So we really take it a step much further. Like you said, we work with newer businesses. Anybody that's been in business for at least 3 months is actually somebody that we can help get access to cash for their business. And even if they're brand new, they haven't even started yet, if they're looking specifically at equipment, we can help them with equipment financing as well. So they don't even technically need to have made any revenue yet on the equipment side. Now, if you're looking for cash, you will have to have made a little bit of money because that's how it works, right? You got to show that you can afford it. But as far as like how we operate, we can go with as little as 3 months time in business for getting somebody cash in their business.
Okay, and so as far as what they will have to produce, as far as like bank statements, do they have to be an LLC? Can they be a sole proprietor? Can they be a partnership? Can you kind of like clarify just?
Yep, absolutely. So that's another great question. And if you are somebody that's looking for funding in your business, this is pretty much not just Rock Financial, but kind of across the board. As far as it goes right now in the landscape, you can get access to things like business credit cards or trade lines for your business right as soon as you start really getting that entity going. It could be a sole proprietorship, but as long as you show some signs of you growing it, you will be able to take advantage of some of that stuff. So there are some things that you can take advantage of immediately when it comes to capital in your business. As far as things that we help with, we're pretty much focused specifically on those businesses, like I said, that have at least 3 months time in business, because we need 3 business bank statements. So as long as you have 3 business bank statements, we can take a look at that for you. Whether you are an LLC or a sole prop or a partnership, that doesn't really matter. You just need a business checking account to get access to business funding, because that's how the whole thing works. They're going to want to deposit that money into a business checking account. They're going to want to pull payments out of a business checking account. And just to take that a step further, when I say they, I'm talking about lenders and banks. We're a broker, so it's a little different for us. We're not actually lending you our capital. What we do is we work with over 75 different banks and lenders. We know all of their guidelines inside and out. We help streamline that process for business owners to get from application to approval and ultimately approval to funding, because that can be a really rigorous process. And everybody believes they have the best product for you. So how do you kind of navigate between all of those? Well, we help you with all of that. We help you understand rates, terms, payment structures. We really go through everything, because we're in the information age. This is 2023 now, so we're in the information age where there is a lot of information available, but are you able to make a well-informed decision is the real question, right? So we get down to kind of the nitty gritty of what does each business actually qualify for and what are they doing with the money? And we use those things to make sense of what approvals that business owner has access to.
Got it. Understood. Okay. So, what is your funding time?
That's a great question.
How fast can you get people capital?
That's a great question as well. I mean, our turn time, and I'm quoting our SVP on this one, Greg Amendola, is as fast as the borrower needs it. And I only say that because we're technology driven. If you are somebody that you apply today and you need funding this afternoon, as long as you're able to get us what we need, and we're going to give you that information very quickly, but as long as you can get us that information, we should be able to get you funding as quickly as same day. Now, the average or typical turn time, just so everybody has a good understanding, is anywhere between 12 and 24 hours for an initial approval. And then typical funding is anywhere between 1 and 3 business days. And again, we move at the speed of our borrowers, right? So if you needed capital more quickly, or if you had an opportunity in just a couple of weeks, that's totally fine as well. But again, when you need it, we're able to get it for you.
Okay, so let's talk about and thank you for that. That definitely helps.
Absolutely.
So let's talk about the credit, right? So do you all look at just personal credit? Do you all at all look at the business credit, like Dun & Bradstreet, Experian Business? Like,
Yep.
What do you pay attention to, and does the one or the other even really matter at all when it comes to this style funding?
So these are all fantastic questions, and let me just say yes to everything. No, I'm just kidding. But it's kind of true, right? When you work with as many lenders and banks as we do, some are really going to care about a personal credit score. Some are really going to look at that business credit score. Some are really going to look at both of those things. So it really is a scenario where, let me just say this: none of them are going to matter anywhere in terms of getting you approved or declined. Where you will see that really matter, and again, this is not just Rock Financial, this is most lenders these days, where it matters most, it will be in your rate and term. That's where you'll see the credit really kind of come through, and the quality of somebody's credit really matter. And I'll even say that lenders actually care more about the quality of your credit these days than the overall score, right? If you're somebody who has a couple of late pays, but you got a ton of trade lines and you've had credit forever, that's much different than somebody who's paid one bill on time for the last 90 days. And they might have a higher score because they don't have as much history or as many negative remarks, right? But that doesn't mean that they have a better quality of credit. So credit is one of those things that definitely matters these days, but it's not going to make or break you. For example, there are a couple of lenders on our platform that don't look at personal credit at all. They'll pop the hood on business credit, but because credit isn't necessarily their main driving factor, that doesn't even matter so much to them. They're really looking at your affordability on the loan itself. By taking a look at the revenue in the business and how the revenue works, they'll use that to determine whether they're going to approve or decline you ultimately. And then what that becomes for you is, I don't want to call it a lifeline, but let's call it a trade line, right? Because that's essentially what it is, right? If you're able to go out and get access to funding, no matter where it's from or who it's with, that's what that becomes for you. So as long as you maintain that relationship, essentially you can see some cyclical changes where, somebody's personal credit score might dip a few points the second or third time they borrow from us, but they're able to maintain or get better terms because they've paid off the loans that they've had in the past, right? Even though their credit score dipped, right? Especially right now. I saw a statistic last week that last year at this time, the overall credit utilization across the country was hovering right around 60%. That same statistic right now is over 93%. So what that means is people are using their credit. That means their scores are going down. That means that banks and lenders can't have the same guidelines that they did a year ago. And if they do, they're probably working with a much more limited pool of borrowers, or they're seeing it in the fact that they're not doing as many loans or lines as they once were, right? So I think where we're at right now is banks and lenders know that they have to update with some of these changes, some of these things that are going on in the economy that are outside of their scope. So as long as you can really afford a loan, I know this is a long answer to a decently
No, it's
short
great. It's great.
but as long as you can afford the loan and you have something that makes sense to borrow the money for, we're seeing a lot of lenders, that maybe they had a 650 minimum credit score, but they'll lend that money to the 620 borrower or 610 borrower. Like I said, as long as the quality of the credit is there, they care more about that. And again, then there's lenders on our platform that don't care about credit at all. Right, their terms are different. I'll be the first person to tell you that. If you're somebody that the lender is not going to look at your credit at all, well, then they're going to be a much shorter term than your typical 3 or 5 year term loan. If you're talking like a true term loan type of product or a bank type of product, they're going to want to see bankable type of credit. So it really depends on what you're looking at. And ultimately, what I always say is, what are you using the money for? Because cost is one of those things that you can make an argument. Cost matters much, much more than just cents on the dollar for a loan. Because for a business owner, it could make or break them being able to take advantage of a major opportunity or solve a challenge. Like we've lent money to people in the past so that they can meet payroll for the next couple of weeks while they were waiting on slow paying receivables, right? If you don't pay your employees, they don't show up on Monday to continue working for you. Essentially, the cost of that loan is irrelevant, right? It wouldn't have mattered if we charged 800% or 9,000%, like a Starbucks cup of coffee. They would have taken the money, right? So the real understanding has to come behind the education as to, hey, why is this the reality of what my options are right now, and what can I do to improve those things in the future, right? Every borrower that we work with, we always try to understand what is their long-term strategy in the business. Do they have an exit strategy for the business, whether that's passing it down to the next generation or possibly selling it, right? Unfortunately, when you're an employer and not an employee, it's not as easy to retire, right? So what does that kind of look like? And we try to make sure that we're going to backtrack to whatever that is, right? And get to right now. So whatever we do right now isn't going to hurt you on a long-term plan, right? Like, we want to make sure that what we're doing now is going to set us up for that long-term success. So when we work with a borrower, just so you have a good understanding of what it looks like, anybody who applies with us, they're going to speak with a funding advisor. And basically that funding advisor is going to go over, hey, this is what's going on right now. These are the questions that I'm going to need answered from you to really give you some directed information. And then these are the documents that you're going to need to get me to get what you're looking for, right? And that's kind of what that initial consultation is all about, is really just understanding, hey, this is the business, this is what they're looking for, and this is what they're going to need to get there. Sometimes that planning phase can take a couple of months. Like, I've seen borrowers come to us, and say, hey, I actually am looking for funding to really get going on this opportunity for next year. Well, that's great. Here's what you need to do in the meantime to be in the best position for when that you're looking to go live with that. Or sometimes that's just the process, right? You could be talking about an SBA loan, and an SBA loan that involves some real estate tied to it. Those take forever. Just imagine this: a bank, the government, and real estate all get involved in one transaction, right? You're talking about a lot of underwriting, a lot of title searching, a lot of background that's all got to go on. So with all of these parties that have to play a part into this one loan, sometimes an SBA loan can take you 6 to 9 months to get done. So again, it really comes down to that understanding of what is the person borrowing the money for, and then what are their options, and then that will determine how much credit or some of these other factors really matter. From their industry to their time in business, some of these things are very similar across the board. But when you talk about like an SBA loan or a term loan or a bank loan, they become more and more important and more kind of, I guess, scrutinized, for lack of a better term, because those things are really what the underwriters are looking for. You may get declined just for your industry. I've seen that happen. I've seen people get declined for how long they've been in business. I mean, we've seen people decline for pretty much everything. So when you are applying, you're applying with somebody like us in your corner, at least we know where to go to get the right decision the first time. That's the biggest factor, right? You could go search business loans on Google, and you're going to get hammered with ads for days after that. But ultimately, any of those people are going to try to offer you money. What matters is understanding, hey, is this the right option for me, and how can I leverage it to make the most money in my business? Because that's really what it comes down to. Each of us can go get you capital, right? And I'm sure you've got relationships, Ronnie, with other people that could get them capital, right? But at the end of the day, what really, really matters is, what are they able to do with the money? Right. And you and I, we don't really know that, right? Only the business owner can answer how dangerous can they be with an extra $50, $100, or $150,000 in their business. And a lot of times the position they've gotten themselves into, it's, hey, I can be pretty dangerous with that amount of money. So that's what we really focus on, is helping business owners understand, how do they take advantage of all the tax breaks that may happen when taking financing? What are the best options? Should I take a loan or a line? Do I need both? Should I look at equipment financing? All of these things are where we really help. And listen, sometimes it's a mixture of all of that. And those are great success stories, right? Where we are able to get somebody cash for their business right now, as well as a line of credit so that they have some flexibility in the future. Any way that we're able to help, though, it could be as little as just sharing some information. That's a win for us, because like I said earlier in this, we're the financing's best kept secret. So the more we could spread that word, the better it is for us. We know that financing's not an if, it's a when, right? So when you think of financing, we want you to think of Rock. And as long as we provide that education, we know you will.
Got it. Great answer. Hey, make sure if you all are interested in Rock Financial, you all hop down in the description, and the link is down there. My next question: does this report to the personal or the business credit, or both?
Great question. So we will never report to your personal credit, because this is business debt. However, sometimes it won't report to business credit. That's a product by product and lender by lender thing. See, what nobody talks about with business credit is how much of the wild, wild west it really is. When you talk about personal credit, there's 3 bureaus, and we all know them: TransUnion, Equifax, and Experian, right? Like, those are major corporations that most people are aware of. And if you're not, hopefully I gave you a little bit of a tip there. But that's it. When you talk about business credit, it works different for everybody. It really does. You have Experian business credit, which is huge. You have D&B or Dun & Bradstreet, which is huge. Those are pretty much the 2 biggest players. But there's a company called Credit Safe. They're the biggest business credit reporting agency in the world. So if you go anywhere outside of the US, Credit Safe is where it's at. So if you're somebody that does business abroad, you may be familiar with Credit Safe, especially if you're in import or export or any of those businesses, right? So what it really comes down to is, sometimes the industries have specific reporting agencies. Sometimes these lenders will have their own specific reporting agencies that they'll report to. What it really, really comes down to is understanding that when you borrow money from a lender, your biggest relationship, yes, you may get benefit out of the business credit side of this with some of these products, but the biggest benefit is going to be you paying that lender on time. Because anytime you need money in the future, trust me, they're going to want to give it to you. Right. At the end of the day, as long as you pay your loans on time with a business lender, they're going to want to lend you money in the future. So that's the best thing that you can do for yourself, is even just think about it. Hey, it is that trade line that I have with this lender directly. Yes, some of our products, especially like the more bank style ones, SBA definitely does. But like the term loans and the lines of credit, especially, some of those lenders report. Some of the cash advance lenders will report as well. So there's some products there that will report to your business credit. None of them will ever touch your personal credit. They will review your personal credit, but they won't report to it, because this is business debt.
Got you. And is it a hard inquiry, soft inquiry?
That's a great question. So as far as what we do a soft credit pull in-house to determine where your credit score is before going to any of our lenders, right? Now, as far as the SBA goes, when you apply for SBA funding directly, they will do a hard pull of your credit, like the SBA requires it. And one or two of our lenders outside of that on the equipment side require a hard pull. But 99.9% of our lenders do not do a hard pull. Again, it's only on the equipment side or the SBA that you would see that. But if you're just looking for regular cash in your business, term loan, line of credit, those are all soft pull only. A lot of the lenders moved away from that because what happens is people buy those credit triggers. And now all of a sudden somebody's trying to sell you a loan because they saw that their biggest competitor pulled your credit last week. So, the lenders have moved away from that. You'll see a lot of soft pulls throughout this industry. And we're the same way. We do a soft review and we pull Experian. And the reason we pull Experian is because we've gone to our lenders and say, hey, what credit bureaus do you guys pull? And 90% pull Experian. FICO 8 is what they pull mostly, in case you were super familiar with credit and wanted to know exactly what it was.
Yeah, I'm starting to see a lot of lenders using Experian. I think it's because they have that direct line with the Social Security Administration, so it helps fight fraud.
Exactly.
Okay.
Exactly. And fraud is the biggest thing right now. I mean, we just saw the government stop giving out free money because of fraud. So, that's the biggest thing these days is, and it ruins it for the people that are out there just looking for capital for their business. You're wearing a black eye for somebody that's, not necessarily, it's not what you do. You're out there just running your business. So, again, that's part of what we do. We make sure that when we approach our lenders, like, you wouldn't know this from not knowing us, but like our lending relationships are the biggest things to us, right? Like as far as what we do and who we are, we can only lend money when our lenders do it, right? It's not like, that's the product that we sell. It's like almost selling on Amazon, right? We're like a third party seller, So like as far as that goes, we can only sell what our lenders allow us to, right? And because of who we are in the industry and how we've positioned ourselves, and we've got 15 plus years of relationships with them. I mean, we get some of the best rates and terms out there. We're known as what's called a wholesale broker because we get wholesale pricing on our products a lot of the time. And what that does is it gets longer terms, higher dollar amounts, and cheaper rates for our clients because of how our portfolio performs at the lenders. Why? Because we do a little bit of an underwrite on the upfront, and we only apply to the lenders that make the most sense, right? So if we know that you're looking for $50,000, we wouldn't send you to somebody who only offers up to $30,000, right? Or if you need a line of credit, we're not going to go to term loan lenders, right? Like that's just the way that we operate. So because of that, our book performs very well, and our clients get the benefit from that, which is, again, access to better rates, terms. I mean, we're constantly piloting programs or testing different things for our lenders because they know we have the technology to give them the feedback on it. But as well as we have the ability to say, hey, this is who you said you wanted to test this with. Here's a good bucket of that stuff, right? When a lender who normally doesn't do transportation wants to start testing transportation, or if somebody doesn't do construction deals and they want to start looking at construction deals, like this is where we're constantly working with our lenders to give them the feedback as to, hey, this is where you could be more competitive, or these are what your biggest competitors are doing right now. We're a big information shop, right? Like I talked about it before, it's the information age. Well, we're all about that. We share information with everybody. We take customers' information and we share it with the relevant lenders. And then we take that information and we share that amongst the lenders, right? So if somebody says, hey, we'll offer 2 months longer than everybody else, or somebody says they'll offer $20,000 more than everybody else, we share that information so that this way we get a real blended offer for a customer where, hey, it could be, rates from lender A, but terms from lender C and the dollar amount from lender D, because we've compared all of those. We've compared and contrasted. We've gone back to the lenders and said, hey, this is what would actually get the best offer on the table, right? And then we take that back to the customer. And a lot of people don't see that back and forth. I mean, it's literally just built out as part of our system that, hey, we share this information so that when a borrower gets an offer, it's truly the best offer that they could receive.
Okay, that makes sense. So you mentioned earlier in the conversation, you mentioned risk and risky businesses.
Yeah.
Does someone's NAICS code, I think I said that right, does that matter particularly, or is it just lender to lender?
So a great question. And honestly, your second part is where it's totally true. It's lender to lender. Some will, and really where it matters is in two areas. Lenders will have no industry restrictions. They'll tell you they have no industry restrictions, but then they'll give you a list of preferred industries, right? So it might matter in those areas where, hey, you might have a bunch of preferred industries and then kind of everybody else. And if you're somebody that is in those preferred industries, that's where you would really want to take advantage of that, right? And then kind of on the flip side of that, some lenders will say, hey, we do all industries, but these are our restricted industries, right? And kind of on the flip side where, hey, you would want to avoid those lenders where you're on their restricted industries because you want to be somebody that's a part of where they're offering all the best terms, right? So like it's more just about understanding lender by lender what their appetite is, as they call it, or for risk, because that's what they call it. They call it the risk appetite, and then being able to understand where they flexible. So like, some lenders may say they're not flexible at all, and they won't go a point under a 600 credit score, right? Whereas some may say, hey, we have a 600 credit minimum, but we'll go as low as 550, right? And then really understanding, hey, to that lender, does it matter more on the industry side or does it matter more on the credit side? And what's great about us is we have all the data that supports all of this. So all of our submissions are going to the lenders that have the highest probability of actually getting the deal approved and ultimately funded. Because we've seen it time and time again where somebody will apply with us and they'll say, hey, I already have an offer for $500,000. And they'll tell us who the lender is. And I don't want to say we laugh, but we know that based on our numbers that lender hasn't lent $500,000 plus since 2018. So like, we know that lender is not doing a $500,000 offer. You might have an approval from them for that, but the numbers say that they're not going to do that deal. So we know that, hey, the chances are you may come back and take our $450,000 offer, which could potentially be even more expensive, right? But we know that your lender was never lending that money to begin with. So again, a lot of what we do is all around that education piece of, hey, this is the expectation. This is what everybody's telling me it is. We really just present reality and say, hey, you'll be able to make the decision best based on this information. And when I say this information, what's really unique about how a business owner looks at offers with us is they get one calculator. So whereas if you work with other brokers, they're going to send you, hey, here's an offer from lender A, here's one from lender B, here's a snapshot of lender C. That's not how it works with us. With us, you get a calculator that allows you to go in and play with all of your terms. And then based on what term you select is what money shows up, right? So if you say, hey, I want to see the 18-month term, you may have access to $500,000 on 18 months. If you select the 12-month term, it might be $400,000 on the 12-month term, right? And you can play with the numbers once you get into that calculator feature based on how much money you choose and what the term is. It will calculate your payment, your rate, and show you everything based on that exact offer. So if you are somebody that is like, hey, I really just want to see the numbers and kind of understand things a little bit, well, that's the perfect feature for you, because that's exactly what you get. You get the ability to go in and manipulate the numbers to give you what's best for your business. I mean, and what's even better than that is if you do find what works for you, you can literally just click accept terms and it will prompt you to get us what we need to go get that deal done for you. So again, it's really all about the process that supports the education more than anything.
Understood. Okay, that makes sense. Last question. When someone sends over their bank statements, what exactly are you all looking for? Is it the amount of money in their savings? Is it the amount of deposits? Is it the amount of money that they had, at the end of the statement? Is it your average daily balance? What exactly are you all looking for before you actually partner people with these different lenders?
This is an awesome question, and it tells me how engaged you are with your network. So kudos to you and really knowing exactly what it is that matters ultimately. I can tell you it's a mixture of everything. And realistically, what they're definitely looking at is how much money you've made and how much money you keep in the account every day. Those are two things that matter for sure. And then once you've kind of gotten past that, I don't want to say they're looking for the negative things, but they're certainly looking at, hey, did you go negative in your account at all? Did you have any NSFs? Is there days where maybe you're not as consistent or don't keep as much cash on hand as you typically do? So it's a little different for every lender, but realistically, what they're mostly looking at is, okay, number one, do they make enough revenue for us to lend them money? And then number two, do they make enough money to afford X payment structure? And what I mean by that is some deals are monthly, some are weekly, some are bi-weekly, some are daily. And people always want to know, why do they qualify for one versus the other? Basically what that is them looking at your average daily balance and saying, hey, when could you afford a payment? And if you could really only afford small payments throughout the month because you don't keep a lot of cash on hand in the business, well, then they're going to offer you a probably closer to like a daily payment versus a monthly payment where, hey, if you did keep a few $1,000s on hand or you did keep a good amount of money on hand, you would see a payment term that might be on that biweekly or monthly side of things. Now, that's not the only thing that they're going to look at to determine payment structure. Your credit will matter there. Your industry will matter there. But they're certainly going to look at whether you can afford it at all more than anything, right? And that's really the main message that I hope everybody kind of got from today is lenders, because of the economy, will deal with a lot. The only thing they won't deal with is you not being able to afford the money, right? So a lot of people will have great ideas or contracts or opportunities in their business, but the business doesn't necessarily support enough today for them to take on the debt that they would like to take advantage of some of these things, right? And that's just the nature of the economy that we're in. Because the economy is a little slow and things are on a little bit of a downslope, they would like you to think that people aren't going to give you money for your business. That's totally not the case. What they're not going to do, though, is they're not going to go above and beyond in a time like this. They're going to give you just enough, or maybe even a little less than you'd like, because what they're trying to do is they'd rather see you take 25 grand 4 times over the next 12 months than give you $100,000 today. That's just the way lenders are operating right now. So they would rather see you pay it back and give it to them and pay it back and give it to, and kind of have that style of relationship versus, one where, hey, maybe if the economy was better, you might be able to go out and get some more favorable terms just because, again, they would have to compete in an environment like that. Today's environment is just a little different. But the best thing a business owner can do is have that information so that they can make the right decision for their business. I mean, there's people that apply with us and they're probably doing it right now, Ronnie, where they'll apply for $1 million and ultimately end up taking 50,000. And you're like, how does that even happen, right? Like, why would you take 50,000 if you needed $1 million? Well, if that 50,000 could be your first step to that $1 million, would you take that first step, right? Because, I'm telling a true fact story here. We had somebody borrow $3,500 from us in 2021. They just renewed and added on to their existing loan that they have with us for $350,000, but their total debt right now that they've taken this year is $1.6 million.
Wow.
So they started with $3,500, applied it to their business, grew their business, took advantage. Their next note was like 15 grand after that. The one after that, I believe, was like 35 or 40,000. Then we were able to really leverage some things. And I think the next one we got them was like 200 grand, but it's been now with the same lender of ours who's really great at helping businesses scale. They've gone from $200,000 with this lender all the way up to now they have over $1.6 million out with them. So it just shows you how people will still take a chance on small business. People will still give you the capital you need to grow. You just got to be able to be savvy with it and go out and do your thing and really take advantage of it.
Wow, that's good to hear. Wow. I actually have one more question if you have time.
Absolutely.
Do you all do business debt consolidation?
That's a great question. So we won't do like as far as I don't even know the right term for it, but like we can do consolidation loans, right? So if let's say you have 2, 3, 4 loans out on your business, we could potentially get you cash in your business to pay a couple of those positions off and really restructure the terms for you into something more favorable. Especially if you have real estate in your business or you own real estate in your business, this is a home run for you where you can tie an asset to that deal, get much longer terms, and really save on the payment and potentially a lot on the interest as well. And then taking it kind of a step further from that, we really, again, specialize in kind of the plan, right? And having that conversation where, hey, maybe today we can't give you any capital, right? Maybe it's 30 days from now, though, that we can help because you're able to make a couple more payments on some of these deals and it becomes a little bit more favorable. The general rule of thumb that a lot of lenders go by is what they call a 50-50 payoff rule. And what that means is basically if you're somebody that gets access to $100,000, they would only pay off $50,000 worth of debt, right? So they want you to net 50% of the proceeds of the loan, and so that you have the ability to go out and make money with it and potentially pay the loan back. No lenders really want to just pay off other lenders, let them get away with, no risk on the deal any longer and take on all the risk, right? So you always have to keep that in mind that when you are applying, again, whether it's with us or somebody else, that they're probably going to want you to abide by that 50-50 payoff rule. And then a lot of other lenders, another rule that's out there is they have what's called a seasoning rule. So it could be 30, 60, or 90 days, but they won't give you another payment until they've seen you make a payment for that long on a loan that you took, right? So for example, if you took a loan last week, it'd be really tough to get one this week because of that seasoning rule in there where lenders would say, hey, we want to see you afford that payment before we'll give you another one or before we'll change the terms up. So that's pretty much the ins and outs of that. But great question. Yes, we can pay off debt through some of the programs that we have. And if you're somebody that has a decent credit score, like 660 and above, or really 650 and above, the SBA actually has a really great program through the 7A for debt consolidation, where, hey, you can really wrap all of that up into an SBA note and potentially pay it off over 10 or 25 years. So that's a real benefit as well, especially if you are somebody that's looking for a good amount of money and you're going to need some working capital on the side. The SBA has a great program that through the 7A that will allow you to use working capital, purchase real estate, or debt consolidation. Those are pretty much like the big 3 reasons why you can borrow a 7A loan. And you can do it any one of those or any mixture of them, right? So if you're somebody that's out there looking for $1 million or $500,000 or $2 million for your business, the SBA might be a way for you to do that too, and we offer those as well.
Okay, gems right there. Before we go, is there anything that you wanted to add? A lot of gems you put in this video. I really appreciate your time. Maybe if you could just touch on what is your minimum to your maximum as far as funding?
That's a great question. And I'll even give you some targeted info in there as well. So on our minimum side, we typically do loans starting at $5,000 all the way up to $5 million. That's loans and lines. Equipment financing or traditional commercial real estate type of deals, we can get a little larger, but perhaps 10 or even $25 million on some of that stuff. But our core focus. And I think that this is probably where, we're the biggest help to a lot of business owners. Not that we can't help outside of this, but where we probably do 80 to 85% of our business is businesses that are borrowing between like $30,000 and $1 million. That's like our core borrower. It's who we help all day, every day. Not that we won't help if you're a little bit smaller or a little bit larger. I just always think it's important that you know where we're most effective.
Got you. Okay, I appreciate that, and I'm pretty sure everybody watching out there will. Again, thank you, Tony. And
Absolutely.
if you're at all interested, or if you need capital, or even if you have questions, feel free to hop down into the description, click the link, fill out the form, and somebody from over at Rock, they're really, really, really nice people, will help you out. So, Tony, again, I appreciate you coming on the channel. You didn't have to, but you did, and trust me, we love you for that. All right, it was really nice to meet you. And we'll do this again, and next time we're definitely gonna do it in person. I'm gonna, come up to you all's office, look around, and sit down, and we'll have another conversation, and enlighten people, because a lot of people really have questions when it comes to business funding, and I think that this conversation right here definitely has answered a lot of those questions. I appreciate you.